Hi guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today we're talking top 10 beginner forex trading mistakes that any novice forex trader should try to avoid. Now remember that none of my videos constitute as financial advice. If you are looking for financial advice, please do speak to somebody that is certified and registered with the FSCA. Now remember that this video is brought in partnership with OctaFX. OctaFX is an international forex trading broker that wants to help you make money through the forex market. Now, in 2021, they actually won Best Broker in the Asia market. Let's talk a little bit about, mistakes that one can make and how detrimental they actually are to whether you earn some money or whether you keep the money that you actually have. And one of the most important things that many of you guys who've watched my videos before know that I'm the prefect, I'm the head girl of education. I believe if you had the education for anything, you really can attempt it, but you've got to understand what the rules are. You've got to understand the information. You've got to understand why certain things work a certain way. And I think the forex trading market is one of those markets where you need to have full information and understanding of how it works. First and foremost, you are buying and selling currencies. You need to understand what is a currency. I know that a lot of people get sucked in by the flashy lifestyle of some of the notorious forex traders that we may know. They see the big cars, the big homes, the branded clothing labels, and they think that that is what a forex trader life ultimately is going to look like. The reality is people trade forex for a life, and you may never ever see that side of their life because it actually can just be one way of making money. And for many people, they're really paying their rent, paying their bonds, paying a whole lot of things with income that they're making from forex trading. So it's not all about the glitz and the glamour at all times. So don't get sucked into it and think that you're going to take your last savings or you're going to take your rent money and put it into the forex market without understanding how it actually works. Because where there's big returns, there's also potential big losses. So it's important to understand that. What type of information or education do you need? First and foremost, you need to spend time on the charts to understand price movements. But most importantly, it's understanding what causes those price movements, fluctuations, what causes those fluctuations. So you've got to be somebody that actually enjoys reading about economies, enjoys reading about market conditions, what type of market and policy changes can actually influence the movement of a specific currency. All of that information is really, really important. The second thing that you actually should avoid at all costs is always biting more than you can actually chew, or always, we always say when some people go to the buffet table, they eat with their eyes. So when they are putting food on their plate, when they're dishing up, they may dish up more than they actually can handle or their bodies can handle. And often you see a lot of people doing that because they want to make big wins. Then they take a big risk when it comes to their forex trading positions. And then there's a loss. And now you're losing your rental, your child's school fees. You're losing money you really cannot afford to be losing. So pick a specific position where you don't want to go past that. Maybe for every single day, say, I don't want to lose more than 2% of the money that I'm going to be putting as a position or what I'm leveraging off, and then be disciplined enough to know that when you get to that point, you need to stop. Remember, things like day trading can become really addictive, and you don't want to find yourself in a situation where you're now addicted to what you think could have been, and now you actually start gambling and you're not using strategy to be able to trade forex, right? The next mistake that I think is very important to avoid is the misuse of forex trading instruments. Things like your stop loss. If you don't understand what a stop loss is and how it's supposed to work, you may just misuse it or not use it correctly. Now, I always say, the funniest thing about financial products and financial instruments is that if you don't actually understand how it works, it may as well not exist. So for some people, it may be because they don't actually know what a stop loss means, so they're not using correctly or they're not using it at all. Or for some people, it could be something like leverage and you're not actually understanding how leverage works, or you are overusing it and you end up misusing it and potentially losing money. So it's important to make sure that those forex trading financial instruments, you understand them and you use them correctly. Now, the next thing is choosing an unsuitable broker. I cannot stress this enough. It's important to choose a broker that is going to match your needs, number one. Two, your strategy. Number 3, how easy it is for you to be able to withdraw, to deposit money, to place positions. All of that is really important when you are going to be choosing a broker. It's like choosing a business partner, essentially, because you're going to be using their platform. It's also about, do they have an app? Do they not have an app? Do they have a customer care center that you can call if something goes, left when you are going right? Are they available? Are they transparent? All of that information is very, very important for you to make sure that you can select the right broker, because I promise you, having the wrong business partner in this space can be very detrimental to your wins. The next mistake that you should probably avoid is taking multiple trades that are correlated. If you are seeing that there's a correlation amongst your trades, or maybe let's say you are copying your trades from a master trader and you are seeing that, and you're a first time a trader or a beginner trader, and you don't actually understand the reasoning behind those positions, please be very aware of that, because what essentially is going to happen, yes, if you win, right? Which is great, because high return, potential high risk, potential high return, right? But the possibility of a loss is also there. And if you're taking correlated trades or multiple of them, when you do lose, it multiplies by the amount of trades that you've actually put out, right? So it's important to make sure that if you are going to be doing that, you actually understand what the implications are for you to be taking correlated trades. The next thing speaks to education. It is doing minimum research and just really depending on copying other people or what other people are doing. It is important for you to understand what is happening in the market, right? And also not just about the market, but your peers. There's a relationship between the dollar and the rand that may not exist between the Japanese yen and the Canadian dollar. So all of those things are things that you need to be aware of, to say, generally when this happens within these two markets or these two economies, this is predictably what we can expect to happen. So because there's relationship that exists between pairs, this is part of research that you would need to actually do. Day events, for instance, can also have a big change and a big swing in terms of price movements of currencies. So doing your research every single day. So even though there's information that is made available, do a little bit more research. Find out what could potentially happen or what has been the trends, because that will also teach you in getting a better understanding of relationships between the currency pairs in which you are actually trading. How many times have you ever heard somebody saying, I don't like mathematics, or, oh my goodness, I actually struggled so much in statistics? Now, the reality is that when it comes to Forex trading, there's a level of mathematics and statistical information that you are going to need to actually analyze. And you cannot deny that, or else you are making a very big mistake when it comes to Forex trading. So it is literally about looking at probabilities and making sure that you want to swing the odds towards the positions that you have placed. And that's literally what Forex trading is all about, right? So that does need some calculations that you're going to have to do, but of course also analyzing data. If you don't analyze the data, if you are not literally surfing through what is being put out, because listen, there's smokes and signals that can be thrown out there that can sway certain conversations, or it's really just put out there as a decoy to what's actually happening in the market. So it's important to understand that you are going to be doing some level of mathematical calculations. You're going to be looking at statistical data to be able to make positions that are going to give you a guaranteed win, which we know there is not much guarantee. But if you're just swimming against the tide and not having any of that information, I promise you, you may not just become a successful Forex trader. So a couple of years ago, when I failed my degree at Rhodes University, I decided, let me take up a new diploma, something that I can actually really do well in, right? And it really felt like, it's a diploma I did in sports management. And as much as I love sports and I would have loved to work in sports management, the degree, or the diploma rather, at that time, this is back in probably 2010, was not at the level. It was even an NFQ something. It was not at the level that the international standard of sports management diplomas was in the country, right? Or internationally or globally rather. And I literally took it to compensate because I was like, oh, I just failed. I need to find a quick win. And that's what a lot of Forex traders do, is that when they've got a big loss, they always open positions just so that they can compensate for that loss. It is important to make sure that you don't do those kind of trades, because we call them emotion-based trades. You become very irrational. You are trading based on emotion, and I promise you, nothing good can come out of that. It is important that you always stay logical. That's why the information the education that you've got is going to assist you. That's why the research you're going to be doing is going to assist you. The mathematics and the statistical analysis is going to help you. Making sure that you're using those Forex trading instruments correctly is going to help you, so that you don't rely on your emotions when it comes to opening trades, or opening positions rather. The second last mistake that you should avoid, and probably should have come all the way to the front, is the lack of a trading plan or a trading strategy. Now, I would always say, if you are going to be a beginner Forex trader, make sure that you've got a trading strategy. We've spoken about a couple of trading strategies in a video previously. Look out for the link in this video to be able to get you to that one. Secondly, have a trading journal, because in the journal, you can maneuver around your strategy. You will say, okay, I use the sculpting strategy, but it actually doesn't work because I'm this type of a person, right? Or you know what, I don't have the energy and the time to really be sculpting the market and making just small little trades. I actually want to open longer positions. Now, if that's the person you are, you journal it so that you don't make the mistake again of actually using sculpting as a trading strategy. Or perhaps maybe there's something about the way you are using maybe longer trade or longer positions. You can write it down. So a trading journal is really going to be helpful, because also, one, you can see your growth as you go back to a couple of years and weeks of you trading. You can see where you started and where you are now. You know exactly what type of conditions put you in a position where you open trades that are not always successful, or when you actually open trades that are successful. You may even write down, this happened in the US economy or the US market, and I think that it may have an effect on the relationship between the rand and the dollar. And because of these markets, I'm going to make or take up this position. And then later on, if you're starting to see a trend and you're like, actually, this happened the last time, and because this happened the last time, granted, past performance is not always an indicator of future performance, but it can help you create a trend. That's why we spoke about that analysis of data and statistical data, trends, understanding price movements. All of that information is going to be important. So for me, a journal is actually just one of the best things that you can do for yourself when it comes to trading. I even use it in investing. I will write down the shares that I've invested in, the livestock I've invested in, how I choose my cows. I will write it all down so that when I do it again, it becomes a lot easier for me to make those decisions as quickly as possible. Because remember, sometimes it is about timing, right? And as much as we say don't time the market, there is potentially certain commodities that you may invest in where you do need to time the actual market. And the last but not least mistake to avoid when you are a beginner Forex trader is skipping that part where you should be spending some time on the demo account. Now, any good Forex trader will have a demo account so that you can practice, so that you can get a control of what's actually happening, so you can see what potential losses, what taking risks would look like, what going with a sculpting strategy would look like, what if you open a day trading, using a day trading strategy would look like, if you're opening long positions, what would it look like? It's important to spend some time before you jump in with real money, to spend some time on the demo account so that you can get a better feel and understanding of how specific things work. I'm hoping that we've given you some information, especially if you are a novice trader, in terms of what are the biggest mistakes to try and avoid so that you have a successful Forex trading career.